Okay, let's do an audio test. Do you guys hear me? Do you guys see me? Do you see the screen? So type in the chat so I have an idea of what's going on. Otherwise I'm going to be a little clueless. Okay, it's coming in loud and clear. Okay, so I'm going to record this thing just in case YouTube doesn't, because I'm new to this whole business, so bear with me. But there are these two guys that are really good on what's it called, they do a lot of car stuff, a lot of car reviews. So they always start the same way. They got this catchy phrase like I happen to like it, so we're going to start with that, and I'm going to get going, get that little joke out of the way. Yeah, whatever. I kind of killed it. What's up, guy? How are you? All right. I'm going to record this also, just in case YouTube doesn't. I have no clue, so whatever. Okay. Let's get rocking and rolling. All right. So, why am I doing this tonight? Well, there's a lot of stuff out there, a lot of misinformation, a lot of crap. So I want to cut through it, get you really ready for what's coming, where you should be, where you shouldn't be, what's real, what's not real, expectations, etc., etc. I have a hard cutoff at 9, so this is only going to be an hour, but we should be able to cover everything. Okay, so let's get started with the first thing first. I've traded through wars. So the last war that I traded, that was a global war, I guess you could say, was 9/11. So I've seen this movie before. Is this a global war? No. It's a very how do I put this nicely? It's very specific, region specific. Now, with that being said, there's going to be a lot of stuff coming out. Some good, some bad, a lot of misinformation, a lot of crap. And I'm going to start off by saying this first thing before we even start looking at anything. Number one, if you have levels, be prepared, they're probably not going to hold. Levels are there for your amusement. They're there for you to quantify why you're getting into things. A level means nothing to anyone else but you. So if you have a level, and that level you expect it to hold, and it doesn't hold, that's your expectation. That's not the market's expectation. If the market wants to go, the market is going to go. If people need to move something, they're going to do it. So it doesn't make a difference if you have levels, if you have moving averages, if you have Ichimoku clouds, RSIs, market profile, Bollinger Bands, Keltner channels, you name it, whatever crap you have going on. I've said this on videos beforehand. If somebody needs to move something, they're going to do it, regardless. It's not market makers trying to get you. It's not shorts being trapped. It's not longs getting rug pulled. Right now, we're in a very headline-driven environment. There's no other way of saying it. Now, we'll start with equities, and then we'll go into commodities, but I'm actually going to be mixing it up. I'm not going to be going in any specific order, and then we'll do questions afterwards. Okay. The first chart I have up right now is a chart of heating oil. I have it on the Q chart. I can change it to the continuous if you want. I'll do the continuous also. It doesn't really matter. Why do I have this up as opposed to something else? Right now, this is up the most. This is up almost 3 3/4%. This is up the most right now, by far. If you look at oil, I'm talking on a percentage basis. If you look at oil, right now oil is only up a little under 2 3/4%. Diesel or heating oil is a full percentage point above it. Okay? So let's talk about number one, what's reality, what's not reality. Okay, reality. Are the Straits of Hormuz going to be closed? Honestly, I don't know. It seems the reports are that they're They've agreed to do it, but they're still waiting on the supreme leader to make a final decision on this. I don't know if that's actually going to happen, to be honest with you. First of all, it's very hard to do it. It's not so simple as just, close a gate and that's the end of that. It's very complicated to do it. That's number one. Number two, China gets out of Iranian oil imports, China gets 80% of that. So does China really want to get cut off from Iranian exports? Probably not. Probably not. So I don't know if China's going to let it happen. That's number one. Number two, even if they were to try and close it, there are so many levers that can be pulled to keep things going. So the first thing here in the US, we have the SPR. So let's just get this out of the way. The SPR was designed for this. That is what it was designed for. It was not designed so that when gas prices get up and they politically want to make it seem like gas prices are lower, they start releasing oil into the country. That's not what the SPR was designed for. The SPR was designed in the late 70s specifically for this purpose. However, the world has changed in almost 50 years. Right now, the U.S. is the second largest oil producer in the world. 2 out of every 10 barrels of oil come out of the U.S. So because of that reason, the U.S. holds a lot of power here. A lot of power. Also, whether you want to say it's a conspiracy theory, not a conspiracy theory, I don't know. OPEC was already starting to a certain extent, get ready for this. They've been increasing for the past 3 months by 400 to 411,000 barrels, a day. So now they're at let's say 1.2, almost 1.3 extra barrels. So they're trying to get back up to where they want to go. Okay. Do you really think that the Saudis and the remaining members of OPEC, but specifically the Saudis, are really interested in losing market share? You really think they want to do that? Probably not, right? They want to be where OPEC. So the chances of oil really exploding, I would say, are pretty slim to none. We're going to get to technically why in a second. I just want to get the fundamental aspect out of the way for a minute because it's really important. Because the problem is you have so many analysts who are just throwing out these insanely stupid numbers just for eyeballs. Okay, you had one analyst, I'm not going to say which firm he was from, put out a $130 price target, which makes no sense. Other analysts that are calling for 100, 110, also makes no sense. Why does it not make sense? If you go back a week and a half, oil was in the low 60s, right? Types, I know that you guys are around and have fallen asleep on me. So I'm going to wake you up. Everybody agree oil was like in the 60s? Low to mid 60s? About a week and a half ago before this whole thing started? There we go. Thank you. So what changed? The reality is if you pull the conflict out, I've said this multiple times on a weekly basis, that demand is not there. I know everybody wants to think that it is. Demand is not there. Because of that reason, oil was going lower to begin with. All this has done is just really push it more into the forefront. But the truth of the matter is that the demand is not there. Right now we're moving on fear. So right now you have to figure we're moving on there's about $8 to $10 worth of premium being priced in. So at $10, we're trading now $75.93. It puts us at 65, let's say 65, 66. With this whole explosion, this whole who knows what, the market expectations were for a 7% move. We didn't open up 7%. 7% was 79. We opened up at 78. And then look what happened. We immediately sold off. Does that mean that this is a screaming short? No, it does not. Don't do that. Don't just start jumping in because you're going to get your head ripped off. That doesn't make sense. But just be aware of your surroundings. Be aware of the environment. The market was pricing in, I don't want to say bombing, but the market was already pricing in Straits of Hormuz being closed. The market was already starting to price in some kind of U.S. attack happening. That was already being priced in. It's already, that's already there. That's all of this. All of this was leading up to this attack yesterday. Okay, so let's just go to a weekly for a quick second. I put this on the video that I did for Commodity Corner, but I'll just reiterate it again. I just want to show you something, just basic, no mumbo jumbo, nothing crazy technical analysis, nothing insane. Here, high, lower high, lower high, lower high, lower high. Simple, just simple and stupid. Again, high, lower high, lower high, lower high, lower high. If this was a stock, what would you be thinking to yourselves? Does this look bullish to you? I'm not saying go out there and sell it automatically and just start shorting it. No, not at all. All I'm saying is, logically, what is it doing? Common sense. Common sense. This is common sense chart reading. What is it doing? So, can we hang out over here for the remaining couple of days? Probably, we could. Could we get back down to 70? Sure. Anything can happen. Could we go up to 85? Sure. Anything can happen. But the reality is, right now, you basically know to a certain extent what you got coming. Now, we do have headline risk, that's for sure, but you kind of, when you're looking to trade tomorrow or the remainder of the week, you already have common sense. High, lower high, lower high. You've got a downtrend. Now, you also have something that oil doesn't. Commodities do this a lot. It's not really a trade that you could be very successful at. You could do it more in equities than you can in commodities. But you could see we're reverting to the mean. Look where the mean is. It's basically around 70 to 73 bucks. Look where we are. Just eyeballing. Simple. Just simple. Look where we are. We're basically reverting to the mean. We're not really doing anything. Okay? Any questions on oil before we move forward? I don't know if there's a delay here or not. I'm hoping that there is. I would encourage you to watch that Commodity Corner video because it goes into a little bit more in depth regarding some of the factors with oil and inflation and things like that. Okay, fine. Let's keep moving forward. Okay, let's move forward. Okay, I told you I'm just gonna sprinkle in. I'm gonna go, commodity, equity. There's no rhyme or reason. Okay, SPY. Okay, equity traders. I want you to hear me and I want you to heed my warning. And if you don't believe me, I wish you the best of luck. But I'm giving you a warning because I've seen this movie before. Over many, many years, I've seen this movie before play out. In times of extreme volatility, we're not there yet, but in times of extreme volatility, there is no reason, absolutely no reason to be looking at individual names. This is when you gotta go to ETFs. It's a lot easier to manage and control risk. That means you'd be in the SPY, you'd be in the Qs, you could be in the IWM, VXX, UVXY, XLE. I would say be in the XLE versus the OIH. We could do OIH also, but XLE. Be in the ETFs. That is where you're going to get the most bang for your buck. As a trader, volatility is your best friend. If you can't make money now as an intraday trader when volatility is heightened, you really, really, really need to rethink what you're doing because now is the time. I tell this to my guys all the time, and I'm going to repeat it here. You make 80% of your money 20% of the time. Let that sink in a minute. 80% of your money is made 20% of the time. The other 80%, you're basically trying not to get killed. That's really what it is. And you're trying to protect what you got and make some cash flow here and there. You will make the bulk of your money in times of increased volatility. That's when you do it. That's when you make money. Because if you're in something that's going to put you to sleep, then you're not going to make money. It's not moving. You need volatility. You need things to move. That is the way you make money. Because you have to think of it like this. Okay? People might not necessarily be looking to sell their equity positions, but I can sure as hell tell you that they're going to be looking to hedge them. That means they're going to be putting on puts. That means they're going to be putting on futures. They're going to be trading ETFs, whether it be double or triple leveraged ETFs, to protect their equity holdings. They are not going to just start dumping their equity holdings because the market's acting, squishy. That's not the way this works. You look at the big boys. Let's say Vanguard, T. Rowe Price, Fidelity. Those are names you guys know. Citadel. You think that every time the market goes up or down like this, on news like this, they're all of a sudden dumping out of their positions? They're getting all their positions down to zero? No way, right? No way. So they got to protect. So how do they do it? They're doing it through either the ES, or they're doing it through the SPY, or they're buying, puts on the SPX. They're doing hedges to protect their portfolios. They are not dumping out of their stocks. So that's why it's more important to be in the ETFs than it is to be in the individual names, because the individual names may not give you the juice that you're looking for. Whereas the SPYs, the Qs, the IWMs, the VXX, the UVXY, XLE, they're going to have juice. They're going to have what you want. They're going to have that movement. That's where you want to be. It doesn't make a difference how much you love the stock. There's a new one, I think Circle, CRCL is the new one that's coming out, or it just came out, something like that. You could love that stock from today until tomorrow. You could be a Tesla lover from today until tomorrow. But in all truth, what do you think is going to really be moving? Are people going to be focused on individual names, or are they going to be focused more on the ETFs, on the market as a whole? 84 to 87% of the general of the market follows the direction of the broad market. So be the market. Do what the market's doing. That doesn't mean take the individual names. It means be in the ETFs. Be where you're supposed to be so that you can capitalize on this. Otherwise, you're just wasting your time. And if you think that I'm crazy, no problem. I'm going to tell you like this. I've seen this happen, just so you should know for yourselves. For those that don't know me, I've been doing this a really, really long time. I traded through 9/11. I traded through the financial crisis. I traded through the European debt crisis. I traded through the China blow up. When they had a currency blow up. I traded through the VIX blow up. I've been doing this for a long, long time, doing this north of 20 years. I've seen it all. And I have seen guys who make money and survive, and guys who just don't. And they're here today, and they're gone tomorrow. This business is about survival. And eventually something clicks, you find your niche, you learn how to maneuver in volatility, you capitalize it, and you have a career. If not, you're here today, you're gone tomorrow. It's just, I hate to say it, and I don't like to be a Debbie Downer, but the reality is that is just what happens here. There are plenty of things I like trading, but right now volatility is heightened. I got to be where the volatility is. Because that's where I'm going to that's where I'm going to get paid. Okay? Are we clear so far? Looks like there's a delay between the typing and the talking. That's okay. Because people, to answer your question, because people would rather, they're not going to sell puts on the individual names. They'll sell puts on, or they'll buy puts and sell calls, or whatever, on, or even sell the what's it called, the futures on the market itself. So the market by itself will move those names, which will therefore kind of start moving the names. What do I mean by that? This is a good question. The SPY, everybody familiar with the SPY? I'm going to be doing like a series on the ES and the SPY. Everybody understand the SPY? What the SPY is, the SPY ETF? The SPY ETF, while you're typing, is an exact mirror of the S&P. The S&P 500. The S&P 500, the SPX, is a non-tradable instrument. Yes, there are options on it, but as an instrument by itself, like the VIX, it's non-tradable. It's a mathematical equation. That's what it is. So it's not like you can pull up a ticker of the... You can't pull up a ticker of the SPX and start trading it. You can trade options on it, but you can't actually trade the SPX because it's just an index. The SPY is a way to trade the S&P. The way that the SPY works and how it affects the individual names is that the SPY has to automatically keep a weighting of the names of the underlying names in it. So if the top 10, let's say the top 5 names are Apple, Microsoft, Amazon, Nvidia, and Google, right? So there's a certain weighting that that has to be maintained at all times. Now, can it move around a little bit? Yes, but you basically know Apple, Microsoft, Nvidia are anywhere from, let's say, 7 to 9% of the index, roughly. So as the S&P is going up or down, then that weighting has to be maintained. So the SPY will be selling the individual names at that clip to keep that weighting in check. Now you'll ask me, well, why can't I just work with the individual names? Because you may not get as much juice and as much volatility in the names as you will in the SPY. Because the SPY is the market. You're capturing 500 names as opposed to one. Or if you're in the Qs, which is a derivative of the NDX or the Nasdaq 100, you're getting the power of 100 names as opposed to the power of one. So it makes more sense to be in just one that's basically controlling to a large extent these 100 or 500 names than it is to sit there trying to focus on how many stocks you're going to get into. 10? That would be crazy. How are you going to manage risk in such an environment? It's much easier risk-wise to just put on the SPY or the Qs. That's when you're supposed to be in them. You're supposed to be in them when volatility is so great and so high that you can't be individual names because you can't manage the risk. Make sense? It's all about risk management. It's a lot easier to put on the SPY, the Qs, and let's say the VXX and the UVXY than it is to put on 30 names. It's very hard to manage risk that way on the 30. That answer your question? Even though the individual names, while you're answering, even though the individual names are moving the index, from a risk perspective, it's too hard. It's way too hard to hold on to it. And I'm not talking about people who are trading, 2, 3, 4, 10 shares. I'm talking about people who are trading hundreds of thousands of shares. It's too hard to do it. If your normal lot size is 1,500, 2,000 shares, and you put on, 30 names, it's very, very difficult to manage risk on that as opposed to putting on, 3,000 SPY or 2,000 SPY and 2,000 Qs or whatever. It's a lot easier to manage your risk. And then you have options into how you could do it, meaning you could protect yourself in many different ways and you could add juice in many different ways, but you're only focused on 3, 4 names as opposed to 30. Now, if you're an investor, this is nothing. This is literally nothing. Just stay the course. Don't even worry about it. I know it's, when I was younger, in my younger days, and I used to hear this thing all the time. You hear it now also. In times of volatility, don't panic, and most people, they always sell the bottom and they buy the top, and I understand why it's scary, because most people don't realize that stocks are designed to go up. S&P is designed to go up. It's created to go up. When you're buying a company, you're buying future growth and future earnings in that company. So it's designed to actually move and to go up. Commodities are a totally different thing. We'll get to that in a second. But stocks are designed to go up. Now, you could get into a company that's a crap company and then you're screwed. But the S&P as a whole is designed to go up. Over a 100-year period, the S&P goes up roughly 10% year over year. That's the math. So, as much as it's frustrating and it's scary when markets go down, and I get it, stay the course. Just stay the course. Don't worry about it. I'm telling you, over time, you're going to do fine. The people that bought at the bottom in 08, 09, they've been minting money for years. Minting money. The people that were buying at the COVID lows, minting money. People who bought here, in the April lows, they're minting money. Now, we had a big move off of it, but they're minting money. So these are the times you're supposed to take advantage. It's like you go to buy a TV, right? So when you go to buy a TV, you put in all kinds of research, and you do 6 months of research, and then you look for a sale, and you want to get the best price possible, right? How many times have you done this? A TV, a furniture, a house, a car, whatever. How many times have you done this? where you do all this research and you look for a sell. You want to get the best deal possible. How many times have you done this? Wow, this delay sucks. Same concept. It's the same exact concept. When great companies go on sale, you got to buy them. Plain and simple, you got to buy them. Why wouldn't you buy them? You know, that's the way this works. Okay? So, let's just go quickly. Let's just start going through this because I don't want to bore you. Okay. So, if we look out at the futures for right now, we just take a look at where they are right now. Okay? S&P is basically down 0.5%. It's down nothing. it's down nothing. We're probably going to open green tomorrow, in all honesty. Okay, so that tells you right away that when you're looking at it, the SPY, okay, that we're probably going to open somewhere closer to Friday's highs potentially, unless something wacky happens overnight, and it's anyone's guess what the hell's going to happen. But at the same time, war is very bullish. I know this sounds like so counterintuitive. War is very bullish because people get behind their country and they buy their country's companies, and they get behind their markets. It has that effect. Every time war happens to be bullish for markets. Happens to be all the time. Okay? There's one that I want to talk about before I continue with the SPY, and I forget. Someone remind me. I have to go over the defense ETF because that's going to be an interesting one. And it's going to be a secret that only you guys are going to know about and whoever watched the video. And if they don't watch the video, they're not going to know the secret. So, aha. Okay. So, I would say, yeah, because everybody's been fear-mongering. That's the only reason why. Everybody's fear-mongering. Why should, I asked this of my guys the other, almost on a daily basis. A very simple question because no one thinks this way. It's terrible what's happening. But what effect does that really have on Amazon's earnings? What effect does it have on Google's earnings? Microsoft, Apple, how is that affecting their earnings? As cold-hearted as this sounds, it's not. No effect. Zero. So why should the market care? Because people are panicking? Fine, no problem. But what effect does it have? Now, all bets are off. If something happens here in the U.S., then we're going to have a different situation. But as long as it's there, I hate to say the words out of sight, out of mind, but it's out of sight, out of mind. I know it doesn't sound good, but as a trader, that's really, you have to look at it that way, because you can't sit here and start trading news and trading what you think is going to happen, because you're going to be wrong. You're just going to be wrong. So I still believe, and I've said this a couple of times, and there was one guy who's been giving me, I could curse, it's fine. There's one guy who's been giving me a lot of crap, or at least he was on YouTube, about my call on Netflix. I think Netflix is going to go to $1,500, $2,000. I still believe it. My main reason, obviously not right this second, but my main reason behind that is because everybody's hiding there. S&P, I would say by mid-July we'd probably make new all-time highs, if not quicker, because we're setting up for it. Okay, Qs are a little bit different, and the reason why the Qs are a little bit different is because they had news regarding tariffs and this whole China trade, so that's what puts them a little bit more on edge. If anything, you would think in this environment, tech's probably going to do really well, because you would expect that tech companies will find a way to swoop in and save the day. So I could see tech doing really, really well in this environment. The thing I want to talk about before I forget is this ETF, ITA. Okay, not many people know about this ETF. ITA, it's the iShares US Aerospace and Defense ETF. So let me just read off to you quickly what's in that sucker, because you're gonna enjoy this. So what's in the ITA? And this is a way for you to play this. Here we go. What's in the ETF? Here we go. In this ETF, I'll give you the top holdings. You ready? It has GE Aerospace, RTX, Boeing, Axon, Howmet, L3, General Dynamics, Northrop Grumman, Lockheed Martin. I know a lot of these guys, a lot of these companies you're probably not going to know, because if you don't know the aerospace and defense sector, this is going to be like Japanese. And I don't know it myself, but some of these names I know. Curtis I don't know. But that's what's in this. So you're, to a large extent, you're buying. Lockheed and Northrop, everybody knows those, right? Who doesn't know Lockheed Martin and Northrop Grumman, right? Everybody knows those companies. That's what's in this. So you want to be in something that's going to benefit. What's going to benefit? What benefits the most from war? What sector benefits when someone goes to war? What sector benefits the most? It's not tech. It's not banks. What sector? This delay is the worst thing. When someone goes to war, what sector is going to do well? That's the question. There's a delay, so that's why I'm not seeing the answers. So I'm sorry if I keep asking the question over and over again. Not the private sector. Nope. We're talking about it right now. When people go to war, what sector does the best? What sector is going to probably make the most money? Unfortunately. The defense sector. This chat delay is driving me nuts. The defense sector. That's what's going to do well. Lockheed Martin's going to do well. Northrop Grumman's going to do well. That's what's going to do well in this environment. When countries go to war and people are going to war, what should do well? Well, you would think defense should do well. That's what should be doing well, right? Not defensive stocks, but the defensive sector. That's what should do well. Okay? So I would keep my eye on this ITA. Now the problem with this ITA is it's a little thin, it's a little loose, and it's a little wide. So just be careful with it. I want to give you a heads up on this. Be careful with it. This trades under 1 million shares. You got to be careful. It's very loose and wide. I mean, you could see right now that the spread right now is about $1.30. So you got to be careful with this. But it's something to keep on your radar. Okay? Another one I always talk about, and this is going to be in play tomorrow. I know I said I wasn't going to talk about individual names, but I'm doing it anyway because I just want to give you something broad that you can deal with and you can take moving forward. CME. CME is a magic indicator. CME, when markets are doing poorly, is usually green. Usually. So when markets are going down, CME is usually going up. Because everybody's because the only place you can trade the ES and the NQ is where? CME. So they make all this money. Okay? All right, let's look at VXX and UVXY. Okay, let's go to a daily now. We're going to go to these weekly charts. Let's go to a daily. Okay. I wouldn't say that that volatility is so awesomely high, because it's really not. It's really, really not. I'm just waiting. Did the chart catch up to the daily? Oh, wow. I'm trying to watch the live at the same time, so well, I hope this does not come off all messed up. Are you guys hearing this good and seeing it well? And is it just me? Well, I hope it's just me. Okay. Okay. VXX, I would be in VXX before I would be in UVXY. VXX is going to have more juice in it because it's more money. So because of that, it's going to give you more juice. Whereas VXX is $53 and UVXY is a $20 instrument. I want to just give you simple math. Understand, a 5% move in a $22 instrument is not going to be the same as a 5% move in a $53 instrument. It's still 5%, but the numbers are not going to be the same. So you want to be in things that are going to have juice, things that actually move around. Okay, so that's why I would tell you go to VXX before I would go to UVXY. Okay? So far, so good? All right. Let's keep moving along. Let's look at some more stock stuff. Okay, USO. Here's the problem with USO, or the good thing or the bad thing, depending on how you want to look at it. The USO is an instrument that is very front month crude heavy, but it also has other things in it. There's the back months are in it. There's some treasuries in there. There's some cash. So it's not a fantastically awesome way to track crude. You know, it's not going to move the same way as crude does. So if you're looking for that type of environment, you got to go to crude. I'm not a big fan of the USO. I don't think it doesn't move the same way. It's very hard to translate the dollars. It's really difficult. But it's available if you want to trade it. You have that. You also have, I would say, XLE is probably going to be the better place to be. Top two holdings in XLE, Exxon and Chevron. That's all you need to know. So it's a monster. XLE, you know, if you're bullish oil or you're bullish these companies, that's where you should be. Okay. So if you're looking at things oil related, just keep in mind two things. One, it takes one headline and you could lose $10 in oil in a second. Okay. Trump put out Thursday when we were closed. He put out a thing that he wasn't planning on going in. Oil dropped $2.50 in 10 minutes. 10 minutes. It went from green to red and it knocked out $2.50. It takes one headline and they will sell that sucker so fast. Why? Because they don't believe it should be up here to begin with. The demand is not there. The fundamentals are not backing it up. So if you're going to get into names that are like lower tier names, be prepared. If there's a turn, you're going to get smoked. So stay in A plus names. So that's why I say stay in the ETFs. It's much easier. It makes your life easier. Okay, let's go back to oil for one quick second. Okay, so we could see right now that oil is basically probing Friday's highs. That's really where we are. We've already broken into it and we're coming back down. Could we fall back down to 74, 73? Sure. Could we remain elevated? Sure. Anything can happen. Expect the unexpected. Nobody knows what's going to happen. Nobody. And the reality is that we're on incredibly high alert, and you need to respect it. Okay? Let's go to a couple more that are moving. Natural gas. So natural gas, we're already in the Q contracts. Let's just go to Q. I know this is not going to look right, but whatever. Okay. It's back above $4. It's in the price range. You know, this is in play now. Natural gas is in play. So I would definitely be looking at that. Okay? Platinum. There are no ETFs for platinum. At least none that are worth even looking at. Platinum, looking good. You know, looking really, really good. So really, I don't want to waste too much time on platinum. I want to keep it more volatility based, even though, you know, platinum has a lot of volatility in it. I want to keep it very, very volatility based. You know, let's. I know a lot of you guys like to look at the ES, so we'll look at the ES a second. Okay, the ES. There's nothing here that's really exciting. I know that, you know, everybody wants to short it, everybody wants to buy it and whatever. There's really nothing here that's really exciting. S&P futures are really in the middle of nowhere. I mean, they're in no man's land. So I don't see why this is a great place to be. Most people make the mistake that they believe that they need to be in indices every day. That's not the, I wish that was the truth. It's not. Most days they don't really do nothing. I don't expect the indices to do much tomorrow. If things stay relatively calm like they are right now, I would expect a flat open. I wouldn't expect much. I think your place to be right now, volatility-wise, is really in energy. Yeah, the VIX is probably going to be moving around. There'll be some heightened volatility, but I don't really see why you would need to be in any of this stuff. I know it sounds weird, but really, why would you waste your time here? So, you know, we'll go back to VXX a second. You know, this is probably going to have some. This might have some juice in it. I don't know. You have any names you guys want to look at while you're typing it in? Remember two things. Okay. Number one, no matter what, if you don't see it, don't take flyers. If you don't see it, don't take the trades. Don't do it. Don't commit your capital because you feel, oh, okay, maybe I'm going to take a shot at it and see what happens. That is a way to end a career. Take the things that make sense to you. Take the things that you're prepared for. If it's not in your plan and you're not prepared, stay away from it. It doesn't matter what this one says or that one says, or what you see in this chat, what you see in that chat, what you see in this Google search, or on this email, or on any other things you could possibly find. Don't make the mistake of following the herd. The herd usually gets slaughtered. Be on your toes. Understand what is going on now. Do the reading. Before the market comes in, don't just do market reading. Understand the environment with which you're in. I'm going to tell you right now, it doesn't take very much for the stock market to get creamed. All it takes, and I hate to say it, and I don't want to say it, and I don't want to wish it, but we also have to be realistic. If there's any sort of attack on the homeland, God forbid, anything, that could cream the stock market in the very short term. As a matter of fact, it could probably close it. So be very, very, very careful. That doesn't mean trade scared. That just means be aware of what's going on. Don't just say, I've got a line. Hold on, let me draw one of these things. Don't just say, here we go. Don't just say, I got a line over here, so if the market's going to hold this. I mean, that's the stupidest thing you could ever say. Or I have a line over here, there's no way the market's getting through this. Who do these lines mean to? Who cares about these lines outside of you? And I don't mean to come off like a jerk, but I want you to be able to protect yourselves and understand. The stuff you draw on your charts, that's for you. Nobody else gives a rat's ass about it. Honestly, and I hate to say it like that, but unfortunately, this is just the reality. You have a Fibonacci. People like to trade Fibonacci, whatever. Don't think that that means anything. If somebody needs to move something, for whatever reason, they're gonna do it. So be careful. Do your reading. Doesn't mean do reading on technical analysis. It means do reading on what's going on. Understand in the morning when you're coming in what happened overnight, not just in the market, in the world. What is going on? That way, you're fully prepared for what's coming down the pipeline. Otherwise, when something happens, you sit there like a deer in headlights, and you don't know if you're coming or going, and you're like, oh, well, what just happened? And meanwhile, you're losing money, and you don't even know why you're losing money. And you come up with stupid answers like, oh, the market makers tried to get me, or I had a line here, my line didn't hold, or the market's trying to get me. Really? The market's not trying to get you. Nobody cares. I hate to say this. Nobody cares. It's about getting yourself ready for the environment with which you're in. I can tell you right now, okay? I have a very bearish bias to oil. I'm not going to lie to you. A very bearish bias. Like incredibly biased. However, the market's not doing what I want it to do. So I'm not sitting there trying to force my shorts onto the market. I have a very bullish bias towards natural gas. It's finally waking up now, but I'm not trying to force my bias onto the natural gas market. Because you know what's going to happen if I do those two things? I'm going to get creamed. And I'm going to sit there like an idiot. And I'm not going to understand what happened. But then I'm going to know when I calm down, I did something stupid. So if you're looking here tonight and you're saying, well, I don't understand why the ES isn't up, or isn't down here at 5,800. Why is it not at the 50 day? Instead, it's hanging out by the 21 and holding. And you're trying to fight this on the short side. You're gonna get run over. There's this thing amongst traders where this badge of honor of getting your ass kicked. It's like a badge of honor. I don't understand it. I don't believe in it. I think it's the stupidest thing. I really do. Because what is the greatness of saying I went into the market today and I lost a bunch of money and I got beaten up? Like, okay, well, like what do you gain by that? Like, what is that? Your job, unfortunately, or fortunately, depending on how you want to look at it, solely is to make money. That's your job, nothing more. So it behooves you to be prepared. So if you're going to be trading tomorrow, the SPY. If the SPY's not moving, then go to the individual names. Don't think that, okay, because we're in this environment, okay, I can't look at individual names. You have to adjust. So if the market is not really moving around so much, then by all means go to the individual names. Why shouldn't you? But if the market starts to really start getting going, and we'll find out, when the Europe opens at 3 o'clock, we'll really know what futures are going to do. Right now, this session is a joke, so I wouldn't even be focused on the session anyway, because anything that happens during Asia usually gets negated for the most part during Europe if it's like bad news. So we'll see where we are tomorrow morning. I think that's the better play. I think right now trading, looking at markets right now, assuming that you know what's going to happen tomorrow morning, I think that's a fool's errand, because when Europe opens, they're going to decide which way they want their markets to go, and we're going to follow, and then we'll try and figure it out from there. But if the market's not having the juice, like SPY, Qs, are not having that juice, then by all means go to the individual names. You'd be foolish not to. You'd be foolish not to. If to a large extent, I said this on the Commodity Corner video. I meant it. I'll be the first one to tell you. I'm going to actually pull this up here a second. I want to show you something. I want to just show you something. Oil was up 15% on the week. Okay? This is intraday. It really didn't do much. Friday was dead. I don't care what you want to say. Friday was dead. Thursday doesn't count, because Thursday just doesn't count. Let's go to. I want to go to a 5-day. I just want to show you something. A 10-day. Here we go. Okay. Look. Gap. That's your juice. Gap. So really, we kind of did nothing. We opened at what? We opened 73.90. I don't know if settlement, but we closed 73.16. Didn't really go anywhere. Had a gap down the following day. Had a nice little move. Basically closed right where we opened. So really, intraday, the juice is really not there. A lot of this has been in gaps, overnight gaps. So oil has, as much as oil is volatile, so scary, hasn't really been doing much. And I'm not just telling you this because I trade oil every day. I mean, every single day. And I'm telling you, it has not been this massive money maker. It just hasn't been acting that way. Whereas let's say you look at natural gas. Natural gas has had some moves. Friday was a nice move. Granted, we weren't in it, but Friday had a nice move. Wednesday was kind of dead. See, it's all gappy. It's just there are some nice moves here and there, but for the most part, we're really not going anywhere. Because they're very much in wait and see mode. Everybody's very much in wait and see mode. All right, let's get some questions. I'm hoping somebody had some questions. Please. I guess while you're typing your questions, if you have any. The idea is to be prepared. If you're prepared for every scenario, you're going to be fine. This is when you're going to be making money. Basically if statements. If this happens, I'm going to do that. If that happens, I'm going to do this. Simple. And if it doesn't happen, it doesn't happen. You do nothing. No big deal. No big deal. Just because your computer is on and the market is open doesn't mean that there's something to do. It's really important to understand that. Just because your computer is on and the market is open does not mean that there is something to do. I wish there was. It doesn't always work that way. What you need to do is understand where markets could go and then add percentages to it. Because the reality is that really nobody's looking at dollar moves. They're looking at percentage moves. Percentages of highs, percentages of lows. That's what they're focused on. The intraday noise is just that. Correct. Look at the ETFs. Look at the volatility. Look at the volatility ETFs. If they're dead, go to the individual names. Then there's no reason. Then you don't have to worry. Then you literally don't have to worry. When things go crazy, which you'll know, when things are going crazy, you'll know it right away. Then go to the index ETFs and go to the volatility ETFs. But if it's not, then just, if it's not, then just, go to the individual names and just stay there. Reach out to me afterwards. Reach out to me afterwards, and we'll have a discussion. The newer person, that's the one I'm talking to. You can probably send me a private message through the Discord, and we'll talk from there. Okay. That's really what I got. I would tell you just one more recap, one more quick thing, just one more. As much as oil is in play, oil is not in play. Just keep that in mind. As much as it's in play, it's not in play. It's not really doing anything. They're pretty much wait and see mode. The fact that it's selling off tells you really all you need to know. I know you're going to say it's up, 2.75%. I get it, but the high is basically the open. The open tonight, according to at least this, the open was 78. We got to 78.40, and we got rejected pretty damn quickly. We're now what? Almost $2. Depending on how you look at it, $2, almost $2.50 off the high. If oil was so bullish and this was all bullish, should it be doing that? Serious question. Type a yes or a no. If oil was so bullish, should it be doing this? Should it be trading 75 when it opened at 78 if it's so bullish? While you're typing, because this what's it called is driving me nuts. This delay. The answer is no. The answer is no. It should not be doing this. But ask yourself, well, how much of this was priced in already? You may think that you have an edge and you understand it better. But let me ask you a question. A serious question. The professional energy traders, don't you think they've thought about these scenarios already? When this originally started a week ago? Do you not think that they already started thinking in their heads where this could be going, having daily meetings where this could be going, planning for it? You think they don't know? You think that they were waiting for yesterday's attack to decide whether or not the Straits of Hormuz may or may not be closed? No way. They'd be out of a job. No way. They already started thinking about it. In fact, they probably started thinking about the attack weeks ago as well, that something's going to happen. The natural gas traders who have been frustrated as all hell waiting for natural gas to get to $4, they got a little burnt out. But now we're back to what's it called? I do in times like this, otherwise I don't usually sit in it. Usually not. Usually not. Only when I need to. Otherwise, usually not. The companies are better. Lockheed, Northrop, the companies are way better. But in times like this, when you need an ETF, you need someplace to where to go. You got to know where to go. A lot of people are going to be frustrated tomorrow when they're expecting the whole world to collapse and the world doesn't collapse. Now again, if something happens, all bets are off. I can tell you right now, if U.S. interests or U.S. bases or U.S. personnel are attacked, it's a whole different ballgame. Then the hell with the individual names. You got to be in the ETFs because all hell's going to break loose. Because then America's really going to get involved. Right now, we're done. It was a one and done type of situation. At least according to what the administration is saying. This was one and done. So who knows? I will tell you though that one of the things that is a positive is that the world was watching, the world saw the response, and the world now knows don't mess. The world saw what happened in Afghanistan, and they knew they could mess. Now the world knows don't mess. So if the Chinese were thinking about going into Taiwan, maybe they paused on their thoughts right now and they said, you know what? Now is not the time. And we're going to do it a year from now, maybe we'll wait. Everything. Overseas, out homeland, everything. You know, is Russia thinking to themselves, do we have a pushover in the White House right now? No, they're not. So the world watched this. The world saw this. And anybody else who's thinking of doing something astronomically stupid right now is probably thinking to themselves, you know what? Maybe I don't want to mess this time. Maybe I'll wait. Now what happens when this administration's over? A different conversation. But for right now, I'm sure people are pausing their thoughts. I'm going to give it another minute for questions. If not, we're going to call it. This is really more like a supplement, and a little bit more theory and to go with the weekend updates and the weekend recaps, just to give a little more context, because those I'm really limited. I try to limit those to 5 to 7 minutes because of attention span. So I try to keep it a little bit more, on the lower side. I did a video a while back on volatility, specific to volatility. It's a long one. It's about 2 hours. I did a webinar. I would advise you to watch it. You don't even have to watch it. Put it on in the background and just listen to it, because it'll give you a lot of insight regarding volatility and how to approach it and what to look for, and etc., etc. It was about 2 hours long. It's very long-winded, but you can kind of just put it on the background and do whatever else you're doing and just listen. You don't have to sit and watch it. All right. I guess that's it. I thank you all for coming. This was kind of fun, kind of interesting. This is not going to be a regular thing. I can tell you that right now. This was kind of like a once in a purple moon type of situation, just because of the environment that we're in. Things are opened up a lot different than a lot of people were expecting. I was personally expecting, based off of overnight indications, I was expecting 1% moves in the indices. I was expecting the market was expecting about a 7% move, roughly 7.5% move in oil. None of that came to fruition. None of it. So there you go. All right, I'm gonna while I was recording this thing, I don't know if YouTube does that. I'll post it. You might want to watch it again. If you do, great. Thank you for coming. And if you guys haven't subscribed, hit that subscribe button. I want to let's get these subs up. Come on, baby, let's get these subs up. All right, just kidding. Thanks for all coming. Thanks for listening. I wish you the best of luck. Take it slow. Take it methodical. Plan yourselves. All kidding aside, plan yourselves. If this happens, I'm going to do this. If that happens, I'm going to do this. If none of them happen, I'm going to do nothing. Don't get sucked in that you have to do something. It's really, really important. Really important. Okay? Really, 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 at all times, you got to protect your ass. Really. Clicking a button is the easy part. Follow the plan. If you follow your plans, whatever they are, if you know that they work, you'll be fine. If you don't, you're going to get bloodied. All right? Thanks again for coming. This will, I guess, at some point be posted. Have a great night. Good luck. And I'm going to start redoing the commodity series and the individual series this week. Last week was a little bit hard for me, but I'm going to start it again this week. And if not, I'll see you on the recaps. Take care. Have a great night. Best of luck.